Hey Lion Army, what's up? Today I'm going to show you an awesome trading strategy. It's with the 25 and 50 moving averages. Trust me, it works really well. I'm going to show you examples from my own trading signals group. I will also give you some tips and advice you can use with this strategy. Trust me, it works really well. If you apply it at the right time, you will be dominating the Forex markets. Enjoy. So just before we start this video, as you can see, this is my signals group. GBP Japanese yen, CAD Japanese yen, all of these trades, Euro AUD, have been sent to my VIP members, and we definitely profited a lot of money. As you can see, these are the same trades. GBP Japanese yen over 94 pips profit, CAD Japanese yen, I believe it's over 50, Euro AUD 180 pips profit. Take profit 1, 2, 3 levels were reached. We're literally dominating the markets, and all of these trades you've just seen were sent with this one strategy right now. So the strategy, what do we actually need? We need indicators. Type in moving average just over here, click 2 times, open up 2 moving averages, change the length of the first one to 25, the second one of 50, and those 2 indicators will likely be the only ones you will need. You might use RSI later on, and I'm going to show you. Right, so once you apply the moving averages of 25 and 50, we will need to mark areas of sensitivity. So we also have this downtrend over here. We can mark an area of sensitivity just over here, since this will be our new resistance zone. The market managed to push towards the upside just over here and made a new higher high, right? So the previous high where the market kind of turned around is where you want to mark your first resistance level. What else can we see? We can also see a nice area of sensitivity over here. This is going to be our support level, right? If we just drag this a little bit down, this is around the level I like to see, right? So what is the market telling me? Since we have this resistance zone over here, this is the support zone. It's currently trending towards the downside, giving us, you know, the 1, 2, 3 touch pattern, right? Currently trending towards the downside. Candlesticks are, you know, in between the moving averages, which is not good indication whether it's a buy or a sell, since it's on a higher time frame bias for a buy trade. As you can see, it's trending towards the upside. We are looking for only long trade, buy trade. So to enter this trade now, I'm not going to just wait for a bounce of the moving averages, right? I need a break of this area of resistance zone, right? This area over here, this resistance is very important. We also need a break of the trend line over here before we enter. The reason why we want to buy only just around this area zone, because this area is currently the resistance zone, and after the markets push through and go towards the upside, we can manage to bank ourselves a lot of pips. So let's see what the market does. So currently respecting the moving averages, shooting towards the upside, breaks the area zone that we had. You know, this trend line over here, the 1, 2, 3 touch pattern has now been broken, started to trend towards the upside. So what do? We need to mark our trend over here, right? So we currently have a nice uptrend. We can delete this one because since it's not trending anymore towards the downside, it has been broken. What we can do is just wait for the market to reach the resistance zone, because the market usually retests its previous high. So let's see what happens. Shoots towards the upside, retest the previous area zone. Where do we enter? Do we enter on a bullish engulfing candlestick over here after a break of resistance? No. But why? You always enter on bullish engulfing candles. Well, because we need to wait for the market exhaustion. After the market pushes steeply, there's going to be an exhaustion to the previous area sensitivity. Previous area sensitivity on a bullish market becomes support. So resistance becomes support. The R becomes an S over here, and then we are shooting towards the upside after it bounces near the moving averages or around these levels over here that I just marked. So let's see what happens. Let's wait, and as you can see, the market did touch the moving average, or nearly touched the moving average. That's what I like to see. Also, if we just zoom in, a bullish engulfing candlestick, this is where I would enter the trade long. So if I did that, I would open a long position just from this candlestick over here. Stop loss just around 80 pips, 25 and 50 just below them, because they act as a support. Obviously, take profit 1 level, I would probably take my first take profit level just around 40 pips, I would say, since the market did reach this area zone and did pull back. I did expect it, but you should collect your profits to the previous area high, right? So the previous area high was around here, so that's where you collect a portion of your trades, and then you move your stop loss to maybe entry or near entry, and then trail your stop loss to maximize your pip gain. So let's see what happens with the market now. It shoots towards the upside very nicely, and we could have banked a lot more pips every time, you know, it breaks an area of consolidation. Let's say an area of consolidation over here, push exhaustion, push scenario, shot towards the upside. We could have potentially moved or even opened up a new trade somewhere around here, stop loss just below the first touches around here, and shoot towards the upside even more to maximize our pip gain and make even more money. And this is how you do it. And the best way to remove yourself from the market as an exit completely is to wait for the moving averages to get touched, maybe to 25 or 50, or even open up an RSI indicator. This is the relative strength index. I love this indicator if used right. As you can see, the market is currently telling me it has been overbought over here, so it should be overbought, but I would probably just wait a little bit because it might be a push exhaustion push scenario once again. So what do? You wait for the moving averages of 25 and 50 to be broken or near broken to close off the trade. So let's see what happens. As you can see, it pushes towards the upside. As I said, push exhaustion push scenario, it actually managed to go up even more, so potentially you could have profited even more money. But after this scenario happens, bearish engulfing candlestick making pretty much new lower low. RSI has been overbought in this area, you know, bearish engulfing candle just at the top. You know that very likely the trend will change and probably a downtrend will happen. So that's where you would have closed off your trade, and you would have banked yourself around 300 to 400 pips profit just by using this moving average trading strategy. Super simple to use. You just need to find, you know, a push exhaustion scenario, right? So as you can see, the trend has been going up. It started to consolidate over here, so you mark areas of sensitivity, right? Push exhaustion push scenarios every single time. What happened? You know, we had this trend line just over here. This trend line now has been broken towards the upside with a nice push. A nice uptrend has begun to form. 1, 2, multiple touches, 3 touch pattern, you know, go towards the upside, push exhaustion push scenario. We know it's a resistance area just around here, so we need to break it since it's the bullish market, right? We want to aim for a buy trade, right? So after it breaks towards the upside, we wait for a bullish engulfing candle just around here, bullish engulfing candle touching the moving averages. We are going towards the upside. We enter the trade long. As you can see, we can go long for as much as we like, around 80 pips stop loss just below the moving averages, shoot towards the upside. We can trail our stop loss and make a ton of money. As you can see, it could have been a 3-to-1 to 4-to-1, 5-to-1 even risk to reward ratio, and you would have banked yourself more than likely around 400 pips profit using this strategy and some price action as well. You could have definitely improved this strategy as well looking at the higher time frame bias. So let's say if we go on the daily time frame, as you can see, moving averages are shooting towards the upside. So you can see it's a nice flag pattern formation, push exhaustion, right? The flag continues, shoots towards the upside. That's what happens on the daily time frame after it breaks the resistance zone, right? Anyway, if you would like to join my VIP group, you're more than welcome to. It's the first link down in the description below. And peace out, lions. Have a wonderful day. Stay safe and goodbye.